and the Chicago Fed conducted a study to see how fast the crypto run happened in 2022, and I think more importantly, how large it actually was. We all covered Celsius and Voyager, those collapses, and FTX to kind of crown it off. But we haven't ever really gotten our hands around a number. Have you been able to quantify, Jonathan, at the Chicago Fed, what happened?
Yeah, that's right. Thanks for having me. And so in addition to the firms you named, we also looked at BlockFi and Genesis, and you used bankruptcy documents to characterize the outflows that they had just before their failures in 2022. And so, what we saw is a classic financial crisis. We saw billions of dollars flowing out. In the most extreme instance at FTX, it was within just a few days. At the others, it was over the course of a week or two. The investors that were able to leave, they left at 100 cents on the dollar. The ones that didn't, they're still creditors to the bankruptcy estate, as you know. So there were, this is an important policy issue that we thought we needed to look at because of the serious lapses in investor protection that we saw with, instances of these firms offering 10, 15% returns on certain investments and making risky investments in firms like Three Arrows Capital or in the Terra Luna project and suffering losses and causing some of their investors to flee.
So what was the number that you found? You looked at Celsius, Voyager, BlockFi, Genesis, FTX. When you aggregate all of those losses and the bankruptcy filings you went through, how much damage did they do?
I'd say I think the most severe run was at Voyager Digital. They lost 36% of their assets over the course of a couple of weeks, and that was several $100 million. Overall, it was in the billions. Of course, it depends on how you value it, because these firms, by the time they actually went bankrupt, the crypto assets they were holding were worth less. It would be almost double in 10 or 20 billion if we valued it at the peak of their crypto asset holdings.
You see an industry here that's kind of in search for new players when it comes to trading and exchanges and even lending here. When you kind of look at the research that you've done across the firms that have gone bankrupt, what are the things that you worry about the most in terms of behaviors that might repeat itself?
Yeah, I think this is an industry where we've seen instances of trying to avoid regulation. In the case of these 5 firms that we studied last year, the most important regulation at issue is securities laws. And, if they were offering investment products that were promising high returns and they weren't registering them as securities. And so this is the exact sort of lapse in investor protection that securities laws are concerned about. I'd also say more generally, I don't need to tell you, there have been acts of fraud in addition to the well-known cases involving FTX. There's also, for example, Celsius and the fraud accusations that the state of New York has brought against its leaders. And that's the sort of thing that can lead to run behavior because people have studied runs over financial history. They find that when investors have trust in their financial institutions, they're more likely to stick around during a crisis. And so when you have an ecosystem like the crypto asset ecosystem, in which there have been a number of frauds and unexpected losses, I think investors might be particularly skittish and prone to running on institutions in a crisis.
I'm looking at your study, Jonathan. I see that Celsius marketed the platform with catchphrases like "banks are not your friends" and "unbank yourself." Voyager Digital urged customers to beat your bank. So, yeah, this is really a pitch that these firms were making, Sonali.
Well, what's interesting here too, Matt, I'm kind of curious to hear one more thing from Jonathan here, which is that there are a lot of regulators out there who believe that crypto is kind of a fringe industry and a risk that's on the horizon. But we have a Chicago Fed historian here telling us that this is a classical financial crisis in some ways. Do you think regulators are realizing the ripple effects here, Jonathan?
I think they're super focused on potential ripple effects and trying to assess them. I mean, I think for the most part, the crypto asset ecosystem is not too interconnected with the rest of the traditional financial system, but we did see some at the end of last year, especially with Silvergate and Signature, two of the most important banks in terms of serving crypto asset customers. And the collapse of FTX and other volatility in the crypto asset ecosystem last year likely contributed to their defaults. And were one factor in the banking problems we saw, especially at their height in March. So that's the sort of unexpected spillover in the traditional financial sector that I think financial regulators are very focused on.
Jonathan, I wonder, when looking at a lot of these firms, they had differentiated units in, for example, FTX had a U.S. unit that wasn't involved in the collapse and failure of the larger international unit that was based offshore. A number of these businesses are breaking themselves down regionally. And of course, the concern is that U.S. investors get caught up in it by using VPNs or some other means, investing in international assets. But we don't know. Were you able to decipher in any way how much these bankruptcies impacted U.S.-based investors as opposed to international?
Well, for the most part, the bankruptcy courts kept the usernames confidential, except for Celsius, where you can actually see the names of every one of their users. But and so you can see a number of international users with names in other alphabets, for example. But that's a tough question, and I think one that regulators are probably still sorting through the extent to which U.S. customers are accessing overseas platforms. But they had a lot of U.S. customers, these platforms.